everyone, my name is Nitin Nahar. I welcome you all on behalf of JK Shah classes to this CA final amendment video for May 2026 exams. Please remember that if your exam is in September 26 or Jan 27 and you have already seen IDT, then also these amendments are applicable. Though it says May 26, but the amendments of May 26 will apply to September 26 exams, also for Jan 27 exams, if you have already completed your IDT. So, without fail, watch this amendment video because in IDT, most of the questions can be having some tricky parts which are from the amendment areas. So be very, very strong on amendments. We are going to discuss the amendments from 1/7/2025 till 31st October 2025 because 31st October 2025 is the cutoff date for amendments applicability for May 2025 exams. Now, this covers statutory update because institute has already released the statutory update, and second, study material, that is Finance Act 2025 amendments which have been made effective. So those amendments are also covered, plus statutory update released by ICI. Both taken together, this PDF file is created. Let's now directly move on to the amendments. The first amendment is the definition of local fund and municipal fund. What was the reason behind making this amendment? See, where do you find local authority in the GST law? Primarily, first place is you find its mention in negative list, where it says if a function of a panchayat is done by central government, state government, or local authority, then it is covered by negative list. That's first place. Second important aspect is any service. See, first one is municipal services. Second is any service provided by government or local authority enjoys a exemption except for four limbs: Department of Post, Indian Railways, which is taxable; aircraft or vessel related services, taxable; transportation of goods or passengers, taxable; any service to business entity other than first three is also taxable, and that is also taxable under RCM. So you find two major entries relating to local authority. One is negative list and second one is exemption. Now the question is, what is a local authority? Because there are some development authorities, like you have Delhi Development Authority, or you have Bangalore Development Authority called as BDA, DDA. Now, all these development authorities said, we are also fully controlled by government, we are also local authorities. So, whatever exemption is available to local authorities will be applicable to us as well whenever we are providing the service. But then there was a circular which is issued saying Delhi Development Authority is not a local authority. Now, to further enhance the claim, government has now provided that local authority is only some municipal committee which is having a local or municipal fund. Now, what is a local or municipal fund? See, local fund is in relation to panchayat area, and municipal fund is relating to municipal area, urban and rural. Now, if you are allowed to use a local fund, how do you get money in local fund? By collecting taxes under a law. So local authorities have the power to collect something called as municipal tax. The moment you are having a power to collect municipal tax, you become a local authority. But tell me, whether Delhi Development Authority or Bangalore Development Authority, who allot plots in some areas which are underdeveloped, can they be called as local authorities? No, because they are not allowed to collect any taxes. Only when you are eligible to collect taxes under a law, only then you have a local fund or municipal fund which you use for the welfare of the general public. So, this definition has made it very clear that not everyone can be called as local authority. Local authority should have a local fund or municipal fund which is generated by using powers to collect a tax under any law. Let's have a look. Local authority, first of all, Panchayat under 243 is covered. Municipality is also covered. Municipal committee, Zilla Parishad, district board, or any other authority. So, Delhi Development Authority said we fall under this. No, any other authority entrusted by the central government or state government with control or management of a municipal or local fund. Only when you are given a control to manage a local fund or municipal fund, only then you become a local authority. Even Delhi Jal Board is not a local authority because it does not collect local or municipal fund. Only the municipal taxes collection done by a authority, they will fall under the definition of local authority. Let's see local fund. Local fund means any fund under the control or management of a authority of a local self-government established for discharging civic functions in relation to panchayat area vested by a law with the power to levy, collect and appropriate any tax, duty, cess or anything by whatever name called. So be very careful. Only when you are vested by a law to collect some taxes, then you are managing a local fund. Same thing is there in municipal fund. The only thing is here municipal fund is for urban areas, that is municipal areas. Clear with this? Yes. So what will be the use of this? In giving exemption or treating something under negative list. These are the two areas where these definitions will be useful. Then Then let's go to Schedule 3. New entry added in negative list, but it is not in the new ICI module. So I don't think a question will be asked from this because it is not there in the ICI module. This is an amendment under Schedule 3. Now the amendment is quite simple. They have added one entry in negative list. They are saying that any goods which are kept in a SEZ, so this is a SEZ. Now, when they are cleared for home consumption or exported, either cleared for home consumption or exported, then these are not liable to IGST under IGST Act. Remember, while these goods are cleared for home consumption, they are liable to custom duty, and this custom duty will have a inbuilt IGST. The relief which is given here in negative list is to avoid double taxation. Please understand, it is not for the purpose of giving a exemption of this IGST. No, 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 no. Custom duty and with that IGST collection will happen because whenever you clear goods from SEZ, SEZ is regarded as outside India. So clearing goods from SEZ is liable to custom duty. Export, the moment you export, there will be no taxes in this case, anyways. But IGST will also not be triggered under IGST Act because this IGST Act IGST is covered by negative list. Now don't mix up those IGSTs. This is still liable. This IGST is covered by negative list. Now, I think the reason behind not keeping this in new ICI module is because SEZ Act 2005 is not in your syllabus. So you don't read about SEZs completely, and that's why Institute wouldn't have kept it. But is it an amendment which is there? Yes, And at lot of places, SEZ provisions are mentioned, and that's why better to read and go this one particular entry. Supply of goods warehoused in a SEZ or free trade warehousing zone 2. Any person before clearance for export or to DTA. So when you sell this before the clearance for export or DTA within the SEZ, the levy will not be triggered. But sir, what if we clear it for home consumption? That time custom duty and that IGST will apply? The answer is yes, because the negative list entry is not talking about amount which you are required to pay at the time of clearance. This is covering before export or before clearance to domestic tariff area. It is like supply of warehoused goods. You remember, within the warehouse, if you make a sale, then that transaction of sale, as it is a custom warehouse, is not liable to IGST. But when you clear it from the warehouse, that time custom duty will apply, and custom duty will have a inbuilt IGST. So, based on the same analogy, this has been created. Be very careful on this. Okay. Coming to the next one, time of supply value RCM eco and exemption related changes. The first and foremost thing is voucher time of supply is deleted. In recent classes, I would have also mentioned this. Now it has become effective for May 2026 exam. Voucher time of supply, identifiable voucher, date of issue, non identifiable voucher, date of redemption. It's no more there. Why was this done, sir? Because there is a CBIC circular which said that if voucher is a prepaid instrument approved by RBI, then it is money, and if it is money, then money is neither goods nor service. There is no question of GST applicability on it. And second, if it is not a prepaid instrument, then still that voucher is a actionable claim. And as it is a actionable claim, you can also write this and keep. And as it is an actionable claim, it is covered by negative list. So voucher per se does not have any taxation. Now when we say voucher per se does not have any kind of taxation, what is the need of giving a time of supply for that? Therefore the time of supply for vouchers is no more there. The time of supply will be based on supply of underlying goods or services and not on voucher. Okay. Then there is a change in valuation, rule 31A. Now, rule 31A, if you recall lottery, the valuation for lottery is face value into 100 by 128 or price notified into 100 by 128. That means government had given a relief saying that the lottery ticket price will be regarded as inclusive of GST. See, when it comes to bets, for bets, 100% of the bet amount is regarded as value. So over and above that, you have to calculate GST. But when it comes to lottery, the benefit was face value into 100 divided by 128 or price notified divided by 128 into 100, whichever is higher. This was the valuation. Now, the GST rate has been increased. So 28% is completely removed. So rate provisions are not there. GST rate will always be mentioned in your question. Now, as 28% is no more there, government changed this to 40%. So now, consequently, an amendment was made here as well. Face value into 100 divided by 140 or price notified into 100 divided by 140, whichever is higher. So The only change is 128 has been replaced by 140 because the rate of GST on lottery has been increased from 28% to 40%. Fairly simple, clear with this. Great. Now, just be careful about one very important aspect. At one place, you'll find RCM, renting of motor vehicle, not paying tax at 12%. That not paying tax at 12%, even today is same in the law. Though 12% rate also has been deleted for that service. But the changes have not been made in the notification. You will go by whatever is mentioned in the classes. For exam, always see the rate of GST which is given in the question, because product wise or service wise GST rate is not in your syllabus. Okay, so you are clear with rule 31A, 100 divided by 140, or price notified 100 divided by 140. Okay, then this definition of specified premise has been changed for 9/5, which is effective from 1st April 25. But there is one issue. It is not included in Jan 26 and May 26 statutory update of ICI. Plus, even in the study material, even today, the old definition of specified premise is used. Let me give you some background, then I will explain you this in detail. See, 9/5 provides that ECO will be responsible to pay the tax for notified services supplied through e-commerce operator. So for notified services supplied through e-commerce operator, ECO will be responsible to pay the tax. Which are these notified services? You have transportation of passengers, except omnibus by a company, housekeeping services, except when the supplier of service is liable to register. That means if the supplier is liable to register, supplier will pay the tax. Accommodation service. Again, accommodation also has this language. Accommodation service, except where the supplier of service is liable to register. And fourth one is restaurant. Now, this restaurant says restaurant other than restaurant in a specified premise. Other than restaurant in a specified premise. That means if the restaurant is in a specified premise, it is not covered by section 9(5). It also means that if a restaurant is in a specified premise, it would trigger 9(1), that is forward charge. Supplier will himself pay the. Now, what is a specified premise? Now, specified premise, as per the old definition which was applicable till 31st March 2025, specified premise is a premise where the declared tariff, it does not talk about value, declared tariff is before discount, for any unit of accommodation is more than 7,500 per day, for any unit of accommodation. That means any single room is given for rent and having a declared tariff of more than 7,500 per day, then it becomes a specified premise. For example, if there is a restaurant inside Taj Hotel, now Taj Hotel, all rooms will be more than 7,500, but at least one room will be having a declared tariff of more than 7,500. So Taj Hotel becomes a specified premise. Now within Taj Hotel, if there is a restaurant, then for that restaurant, it will be a case of 9(1) forward charge. Correct? Correct. Now, This was till 31st March 2025. With effect from 1st April 2025, there is a change in the definition of specified premise. Now, specified premise has three limbs. What are these three limbs, sir? First one, mandatory. Next two, optional. Meaning, if you fall under the first point, then mandatorily you are a specified premise. You have to pay tax under 9(1) forward charge. If you fall under second or third, then you have an option to declare yourself as a specified premise. Now, if you declare yourself as a specified premise, then in that case, you can pay tax under forward charge. Let's understand what is this. Mandatory. First of all, the person is providing hotel accommodation service, and any unit of accommodation exceeds 7,500 per day of value in preceding financial year. Now, see, it is so clearly defined, because the problem in the above old one was, first of all, declared tariff was a issue. Second, any unit, which year do we have to check? Now it clearly says that first of all it can be any unit. Second, we have to always check value. Third, we have to check this for preceding financial year. That means if last year any room was let out for more than 7,500 per day in that hotel, then in that case any restaurant in that hotel will be regarded as a specified premise. Clear? Okay. Sir, what if I have a small hotel but I want to become a specified premise? Then the law has given you an option. If you are a registered person providing accommodation service and you give a declaration to the GST officer between 1st January to 31st March of preceding financial year, that I want to be called as a specified premise, then from 1st April onwards, you will be regarded as a specified premise. So careful. A small hotel which does not have room charges of more than 7,500, can they also become a specified premise? The answer is yes. They can become a specified premise by giving a declaration to the GST officer between 1st Jan to 31st March of preceding financial year, meaning from 1st April they will be becoming a specified premise. And then third one. Third one is where you have applied for registration, and within 15 days from acknowledgement of having applied for registration, you give a declaration that I want to be a specified premise. So here you are unregistered person, you applied for registration, and when you apply for registration you get a ARN, application reference number. Now from that application reference number, within 15 days from that application number, you give a declaration to the GST officer that I want to be called as a specified premise. Then the restaurant within that specified premise will be covered under 9(1) and not under 9(5). The advantage of being under 9(1) in few cases might be ITC. And see, not every restaurant gets ITC because of rate notifications, but that those who are serving alcohol, they have a higher rate of GST. But please remember, rate of GST is not in your syllabus. It will always be given in the question. So totally three limbs are there in specified premise. First one, mandatory, where you yourself will become a specified premise if last year any room rent was more than 7,500 per day. Second and third, you have a discretion to give a declaration. If you are a registered person, you can give a declaration between 1st Jan to 31st March. If you are an unregistered person, you can give a declaration within 15 days, specifying yourself as a specified premise. Now, what will happen in this case? Now, think about this. See, Taj has one registration in Karnataka. Now, Taj obviously let out for more than 7,500. Restaurant as are paying tax under 9(1). Restaurant within Taj is paying tax under 9(1). Now a new branch is started, Mysore. New hotel is constructed in Mysore. Now Mysore hotel, last year though no room was there. That means it was not let out for more than 7,500. And they will not take a new registration for Mysore. They will add it as additional place of business. Sir, can they also take registration? Yeah, they can take separate registration, but generally for one state you have one registration and you will add it as your additional place of business. Now, when you add it as your additional place of business, whether you fall under this, whether you fall under this, whether you fall under this, now, yes, you will fall under this. Explanation has been inserted. An explanation has been given that whenever you add something as an additional place of business, within 15 days from adding it as additional place of business, you get a acknowledgement for amendment to GST registration. You can still give a declaration. That's one explanation. Second, see, for newly constructed properties, you are going to provide accommodation. Till now, you have not provided. Is that also covered under this? The answer is yes. If you are going to provide accommodation, still you will be covered in specified premise. Clear with this? So there are two explanations and three parts. Totally 5 points in specified premise. First point, any unit of accommodation more than 7,500 in last year, specified premise. Second one, option for registered persons. Third one, option for unregistered persons or who are adding new additional place of business. Then uh, restaurant accommodation service provided or to be provided, both the people will be covered. And for additional place of business, it will be as if they are covered in the third part. Now let's read all these points from the law. See this carefully. Specified premise for a financial year. That means this has to be checked financial year wise. A. A, you can give a arrow and write mandatory. A premises from where supplier has provided in preceding financial year. Circle preceding financial year. Hotel accommodation service having value of supply. Circle value of any unit of accommodation above 7,500 per unit per day or equivalent. So first one, mandatory. The moment a premise from where the supplier has provided last year accommodation service value exceeding 7,500 per day. B. See, B1 is optional. That means you have a choice. A premise for which a registered person supplying accommodation service has filed a declaration on or after 1st January but not later than 31st March of preceding financial year, declaring the said premise as specified premise. That means you yourself are declaring that premise to be a specified premise. Third one is also optional. Let's see. A premise for which a person applying for registration has filed a declaration within 15 days of obtaining acknowledgement for application, declaring the said premise to be specified premise. So if I give a declaration, then it will be regarded as a specified premise. Explanation 1. For the purpose of this clause, premise means a place from where hotel accommodation service are being supplied or to be supplied. So hotel accommodation is anyways mandatory, but being supplied or to be supplied, meaning till now no one has come for rent, but I have a hotel room which I can rent now. That case is also covered. Explanation 2. For the purpose of C1 is this unregistered person. Expression person applying for registration shall include person applying for amendment of registration to declare a additional place of business. Very important. Institute can test you on this. So a person applying for a additional place of business, can they also be regarded as covered under clause C? The answer is yes. They can also be regarded as covered under clause C. That means while they apply for additional place of business, within 15 days, they can go ahead and make a declaration saying that we are a specified premise. So for this now you can note down that Bangalore, Taj, Mysore, new premise. So Mysore new premise can become a specified premise if you apply, if you give a declaration within 15 days. Clear? Okay. Then next point is relating to 9.5. An additional entry has been added in 9.5. Now first let's understand what 9.5 is all about. See this carefully. Now 9.5, we have already discussed that ECO is responsible to pay the tax for notified services supplied through e-commerce operator. Okay. 4, you already know those 4. Which are those 4? Transportation of passenger, housekeeping, accommodation, restaurant other than restaurant in a specified premise. Now, government wanted to bring local delivery into taxation. Now, when I say local delivery, what am I trying to imply? Local delivery meaning porter. What is porter, sir? Say suppose you forgot your book at home. Now you can just book a parcel from your home to college and a person will deliver it to your college, or Zomato, Swiggy, or Blinkit, Zepto. These are all local delivery. This is very new sector which is developing now. Now local delivery, all these were claiming exemption. Is it? Yes, all these were claiming exemption or no tax under forward charge. Let me tell you based on which entry were they claiming a relief. See, there is an entry in exemption which says transportation of goods by road other than GTA or courier agency. So Blinkit used to say that, see, we are not a GTA, we are not a courier agency, we are doing transportation of goods by road, so we are exempted. We are not courier, obviously no. We are not GTA because GTA a consignment note has to be issued. We don't issue any consignment note. Same way, Zepto also on delivery charges used to claim a exemption saying that we are providing local delivery. We are not a GTA, we are not a courier agency, so we are exempt. Sir, what about Porter? Porter used to say we are a GTA, but still claim a exemption. Huh? Wait, see, there's another exemption which says GTA providing service to unregistered person other than specified person is exempt. So they were claiming exemption under this, saying that we issue consignment note, but generally we give service to unregistered persons, which is exempt. Sir, what if porter is booked by a businessman? Then they used to say GTA to registered person or specified person. Two options are there, na? Taxable forward, taxable reverse. Reverse charge mechanism, registered person or specified person will pay the tax. So they used to check this position, saying that we are not going to pay any tax. That other registered person or specified person has to pay the tax. Where is the question of we paying tax? So on local delivery, was government getting even a single rupee of taxation? The answer is no. Government was not getting even a single rupee of taxation on local delivery. But tell me one thing, is local delivery a growing sector? Very rapidly going growing. We now don't want to walk to the general store. We will just blink it, Zepto, Zomato, Swiggy, Porter. This is growing very fast, and any sector which is growing very fast, government feels the necessity of having a share of its own out of it, called as taxes. So they wanted some share out of this service. Now what should be done? Now they made three amendments. See this very carefully. First, in this exemption, they added an explanation, and that explanation says local delivery through e-commerce operator or local delivery by e-commerce operator, no exemption. So they added a explanation saying that local delivery through e-commerce operator or local delivery by e-commerce operator will not get this particular exemption. That is point number one. Point number two, they amended the definition of GTA, and they said GTA excludes local delivery through e-commerce operator, local delivery by e-commerce operator. Wonderful. That means first point which you saw, that is to exclude the exemption which was taken by Zomato, Swiggy, Zepto, and this is to remove the exemption which was taken by Porter, because Porter used to say we are GTA. They said no, if you are doing local delivery by e-commerce operator or through e-commerce operator, you are not a GTA. As you are not a GTA, one. Okay, so basically they excluded local delivery. Then they added one entry in 9.5 saying local delivery through e-commerce operator except when supplier of service is liable to register under section 22(1), that is registration limits. So now people cannot argue, like Zepto cannot say we are not giving local delivery. Local delivery is given by the local delivery partner. it is only through us, so we will not pay tax. That argument is now not allowed, because if local delivery is through e-commerce operator, then that e-commerce operator will be responsible to pay the tax unless the supplier is paying the tax. This is similar to accommodation and housekeeping entry in 9(5). So three amendments which were made to bring local delivery into taxation. First amendment, in the transportation of goods by road exemption, they added a explanation that local delivery will not enjoy a exemption. Then they amended the definition of GTA, saying that it will not include a e-commerce operator where local delivery is through it or local delivery is by it. And if someone tries to act smart saying that we are not doing local delivery, it is someone who is doing the local delivery through us. Then government said, yeah, you are the eco, you are responsible to pay the tax under 9(5), and they added one entry under 9(5). So three major amendments, all three can be clubbed together to make a very good question on just this amendment. So be very careful, be strong with the law. Local deliveries will not get an exemption if it is by e-commerce operator, forward charge. If it is through e-commerce operator, 9(5). Exemption will not be available. You can't take a position that you are a GTA and do local delivery. Then who is a GTA, sir? GTA is Karnataka, within Karnataka transportation, within Maharashtra transportation, Mumbai to Pune transportation by goods by road, that night time which happens basically, those are covered, not local delivery. Okay. Let's read the provision, beautifully stated provision. Let's see. And you can also make a note of this so that you have a very good hold on the part. And otherwise, you can just keep a screenshot and write it whenever you want to. But write this and keep. It will uh, make that as an imprint in your brain. And next time when you read it, it becomes very useful. And the only reason of doing this entire thing in complete English is you will get a hold of the language. See, at present, na, if the question paper is even a bit tricky, then we tend to slip on the language, or we don't have a habit of reading too much data and analyzing it, because we have heard everything in Hindi plus English while the question paper is completely in English. So just be a bit careful on that. Okay. 9(5), additional entry. Service by way of local delivery, except where the person supplying such service through e-commerce operator is liable to register under 22(1). 22(1) is registration limit. That is 10 lakh, 20 lakh, 40 lakh. Careful. So service by way of local delivery is now covered under 9(5). So if it is through e-commerce operator, local delivery through eco, 9(5). Local delivery by eco, 9(1) forward charge. No exemption. Okay, let's see the exemption entry changes. An explanation is added in exemption relating to transportation of goods by road, and GTA definition also stands amended. Two changes: exemption changed, GTA definition changed. Now see the exemption entry. This is the exemption entry. Service by way of transportation of goods by road, except services of a GTA or courier agency. So anyone transporting goods by road was exempted except GTA or courier agency. Now explanation has been added. See the explanation. Nothing contained in this entry shall apply to. So This entry will not apply to, that means no exemption taxable. Local delivery service provided by an e-commerce operator, circle by, local delivery service by an e-commerce operator, or local delivery service provided through an e-commerce operator. So the moment local delivery is being done by or through e-commerce operator, it will be taxable. Okay. Definition of GTA amended. Let's see. GTA means any person who provides service in relation to transportation of goods by road and issues a consignment note by whatever name called, but does not include. See, this is new. This is the amendment part, but does not include e-commerce operator by whom services of local delivery are provided, e-commerce operator through whom services of local delivery are provided. So if an e-commerce operator is doing a local delivery, then it is not covered. If the e-commerce operator through, then also it is not covered. Hmm. So now let's talk about the next entry, which is life insurance and health insurance. You would have heard in newspaper and in news that life insurance and health insurance GST has been removed. Yes, GST has been removed and our syllabus has been increased. The life insurance business or health insurance business provided service from insurance company to insured will be exempted from GST except group insurance. Only group insurance will be liable to GST. Now, what is group insurance, sir? Say, suppose I take insurance for my family. Is it group insurance? The answer is no. Group insurance never covers family insurance. Group insurance is where employer employee where employer takes a group insurance for all the employees under one group insurance package. That group insurance is taxable. And second can be association and members. Say suppose there is an association and association takes insurance for all the members, then that is a group insurance because a group insurance policy will be issued in such cases. For instance, say suppose ICAI is our association. Now ICAI being our association, say suppose they take group insurance for all the members, that is all chartered accountants, then that group insurance will be taxable. But if individually we chartered accountants take any insurance, then it will enjoy a exemption. Clear? So life insurance, health insurance completely exempted. Group insurance will be taxable. Personal insurance of a person, then in that case, whether it includes family, still exemption will be available. Then remember, health insurance is defined like personal accident policies or travel insurance. That is also covered under health insurance policies. Those will also enjoy a exemption. Now, sir, life insurance and health insurance are exempted. What about reinsurance of these? Reinsurance of these is also exempted. Wonderful, sir. See this carefully. Say, suppose HDFC Life is providing health insurance. So, this will be exempted, provided to, say, suppose a chartered accountant. Now, say, suppose reinsurance is done and reinsurance premium is charged. This will also be exempt. Then, sir, what about HDFC Life providing service to JKSC as group insurance? Group health insurance will be taxable. reinsurance will also be taxable. Sir, when you are explaining this, can you also explain us about reinsurance commission which we learnt in negative list? Hey, you remember reinsurance commission? Negative list. Reinsurance commission is covered by negative list if the reinsurer has paid full GST on the reinsurance premium. So here if any reinsurance commission is charged, then in that case this will be covered by negative. Why is this covered by negative list, sir? Because this is taxable. As reinsurance premium, you would have paid full GST. Reinsurance commission will be covered by negative list. But what about reinsurance commission of exempted policies? You think now reinsurance commission of exempted policies, this will be taxable. Why will it be taxable, sir? Because the reinsurance commission negative list entry is only when reinsurance premium is taxable. If this is exempt, then reinsurance commission negative list entry benefit will not be available. High chances if institute wants to trick you, they will try to add these two things. And you please write the supplier and recipient properly. See very carefully whether supplier and recipient are correct. Let's have a look at the entry. Services of life insurance business provided by an insurer to the insured. So insurer is providing to the insured. Plain entry, any life insurance policy exempt. Where the insured is not a group. That means if it is a group, then taxable. Is group defined, sir? Yes. Group can be employer-employee group or non-employer-employee group. I'll make you write an example. Explanation. For removal of doubts, it is hereby clarified that this exemption shall apply to a contract of insurance where the insured is an individual or an individual and family of the said individual. Individual or family of individual both are covered. Please careful. Shall apply. Circle and keep. That means family insurance exempt. Don't consider them also as group. Be very careful. The group. Okay. For the purpose of A, family shall include all individuals insured as family in the contract of insurance. Good. That means no need to refer to the definition of family. Whoever is family in the insurance policy, he is family for the exemption notification also. Okay, services by health insurance. Sorry, services of health insurance business provided by an insurer to the insured, where the insured is not a group. That means if it is a group, then taxable. And this explanation is same, that the exemption will be applicable to family. Family means family as defined in the contract. Okay, now let's see the definition of health insurance business. Means affecting of contracts which provide for sickness benefit or medical benefit or surgical or hospital, whether inpatient, outpatient, travel cover or personal accident cover. So health insurance, whether it is part of travel cover, personal accident cover, outpatient, inpatient, all the types are covered under health insurance business. This is quite good. Otherwise, there would have been confusion. Then, reinsurance of above two insurance is also exempted. Very good. That reinsurance of above two will also enjoy a exemption. Then, The definition of group for the above insurance exemption entries is as follows. That means this will be taxable because the moment you become a group, it will be taxable. Group means a group of persons who join together with commonality of person or for engaging in common economic activity other than for availing insurance and includes. They have not come together for insurance. They have come together as chartered accountants, that is association and members and employees. Employees, they have not come together for insurance. They have come together for employment. Okay. First one, employer employee group, where employer employee relationship exists between the master group policyholder and the members of the group in accordance with applicable laws. This is normal employer taking group insurance, nor employer employee groups. You can write an example: association taking insurance for its members. Okay, non-employer employee groups where a clearly evident relationship exists between the master of the policy and members of the group for services or activities other than insurance. Obviously, they have not come together to take insurance. They have come together for the purpose of forming a residential association or members of ICAI, not for taking insurance. Okay. So this was exemption related changes which have happened. Now let's talk about input tax credit changes. Now input tax credit section 20 deals with ISD. Now careful. ISD is now mandatory. See, there is a circular number 199, which is issued by CBIC, which said ISD is optional. That circular has not been kept in your new ICI module. So as it is not in ICI module, please ignore that circular. Yeah, cross charge can apply. Sir, what is cross charge? Cross charge is where some service is provided by one branch to another. Then that first branch will charge the second branch. That is called as cross charge. In service distributor is for services which are common input services. So any common input services will be have to be distributed in ISD route mandatory. Institute has clearly mentioned that in the new ICI module. So ISD regard it as mandatory. That means the moment there is common input services, the billing of this common input services should be to ISD, and then ISD will be responsible to distribute the credit to various GST numbers. Correct? This is one important thing. Second, can ISD receive both forward charge and reverse charge mechanism invoices? The answer is yes. ISD can receive forward charge as well as reverse charge invoices. In both the cases, ISD will have to transfer and distribute the credit. So if you see the new definition, ISD including invoices in respect of services liable to be paid tax under 9394 of CGST Act or 5354 of IGST Act. This yellow part, or I'll just make it green. This green part which you see is an amendment of Finance Act 2025. This line of IGST was missing. Now Finance Act 2025 has added this. Other than this, everything was already there for Jan 26 examination, was already there for September 25 examination. So the only addition in ISD is 53 and 54 of IGST Act is added. Second, ISD is to be mandatorily followed. That means if you receive common input services, you cannot use cross charge mechanism, because this circular number 199, see in real life na circular number 199 is not deleted sir, no. Circular 199 is even today there in existence. CBIC has not deleted it, but ICI has removed it from the module. That means you don't have to read circular 199, which gave two options: either you can go to ISD route or you can do cross charge even for common input services. But now ISD is mandatory for examination purposes. Real life arguments can still happen, but for examination purpose, for your exams, ISD common input services needs to be distributed. Sir, are there some changes relating to how it is distributed? Now, it is same which was there for Jan 26. I have just kept the entire thing here, but whatever you have written in the class, same thing applies. I'll just give you some brief on this. Credit attributable to one unit will be distributed to one unit. Credit attributable to few units will be distributed to such few units. Credit attributable to all the units will be distributed to all the units. C plus S within the state will be distributed as C plus S, and outside the state it will be distributed as I. I will always be distributed as IGST. All this will be based on preceding financial year turnover. If preceding financial year turnover for all the recipients is not available, then preceding quarter turnover or previous to the month for which in which the distribution is to be done. Credit note will also be distributed, debit note will also be distributed. Debit note will increase ITC, credit note will reduce ITC. Now, due to credit note, if the distribution becomes negative, then in that case, that negative will have to be paid by the recipient branch. So there they will have to do the reversal. Eligible and ineligible credit both have to be distributed. So the rules remain same. The only point which you need to keep in mind is how the distribution has now become mandatory. Plus ISD now can receive invoices of reverse charge mechanism, and they will distribute those reverse charge mechanism invoices. And who will pay the RCM and avail ITC? That will be done by the respective branches. But can ISD receive RCM invoices? The answer is yes. Can ISD distribute those RCM invoices? The answer is yes. The liability to pay the tax on such RCM invoices will lie on the recipients and not on the ISD. Be careful of this one particular aspect. Now, let's have a look. ISD means a office of the supplier of goods or services or both, which receives tax invoices towards receipt of input services and includes invoices in respect of which service is liable to be paid tax under 9394 or 5354 for and on behalf of distinct persons referred in 25, and is liable to distribute. The word liable to distribute is interpreted as you have to distribute it. Credit in respect of such invoices in the manner as provided in section 20. And section 20 says as may be prescribed. Based on that, rule 39 has prescribed that it has to be distributed in same month. It should not exceed. Credit attributable to one recipient should be distributed only to that recipient. More than one recipient, pro rata basis based on turnover. All recipient, pro rata basis again. Then the credit, whether the recipient is registered or not, doesn't matter. You will have to distribute it, and then the other party will get ITC or not get ITC. That's secondary. Then relevant period preceding financial year, and then last quarter for which the turnover is available previous to the month during which the credit is to be distributed. Recipient should be of the same pan, that's obvious. Now careful about this. Turnover is value of turnover reduced by earlier taxes. So earlier taxes will never form part of turnover or distribution. Mark this, very very important. Then ineligible and eligible will be distributed separately. I will be always distributed as I. C plus S within the same state will be distributed as C plus S. Different state, IGST. ISD will issue a ISD invoice. ASD will issue a ISD credit note. Debit note and credit note will be based on the same ratio. And if uh, after distribution, if it is negative, then it will be added to the output liability of the recipient. Be careful of this. If you have distributed something wrongly, can it be rectified? The answer is yes. So, if you have distributed excess to someone, some recipient, then you can issue a credit note, and to the other party, you can issue a invoice. So be careful of this important change. Earlier, if you distribute wrongly, there was no methodology which was available to correct it. But now, is there a methodology to correct wrong distribution? The answer is yes. If there is a wrong distribution, then in that case, now the distribution can be corrected by using credit note and invoice. Be very careful, mark it as important. High chances institute tests you on this particular aspect. Okay, now coming to 17.5. Plant or machinery, plant and machinery. Good days for students. Now, in both the places, plant and machinery is replaced, notwithstanding any court order, any judgment. Plant or machinery should be read as plant and machinery even for earlier periods. So, what had happened? There was one entry, goods or services used for construction of immovable property, and here plant or machinery was mentioned. This was block credit. So, if it is for plant or machinery, you will get ITC. Other than plant or machinery, no ITC. Works contract used for construction of immovable property, and here plant and machinery was mentioned, and plant and machinery was defined, but plant or machinery was not defined. Now what government has done is, at both the places it will be plant and machinery. So plant and machinery, any goods or service used, will you get ITC? Yes. Plant and machinery excludes land, building, other civil structure. Then you have telecommunication towers, and then you have pipeline outside the factory. So for these three, no ITC. Careful. Now it has become simple. Both the places, plant and machinery is mentioned. There was a judgment, safari retreats, which will not have any impact now, because now at both the places you have plant and machinery. Okay. Okay. Then one very important circular has been issued on treatment for secondary or post sale discount. So when we say secondary or post sale discount, what are we talking about? We are talking about post supply discount not known at the time of supply. Not known at the time of supply. So that means you recall something post supply discount if it is known at the time of supply. Then supplier will reduce his output, recipient will reduce his ITC. Correct? Supplier will reduce his out, recipient will reduce his ITC. But if it is not known at the time of supply, we used to say no impact on output and ITC. We used to say this, right? No impact on output and ITC. Whatever was initially charged, that will remain as it is. Plus, recipient is not required to reverse ITC. This has been clarified by CBIs. Three things have been clarified. Listen to me very carefully. First, no output reduction by supplier and no ITC reduction by recipient. So neither of them will do anything. That means nothing to be done. Supplier will not reduce his ITC. Sorry, supplier will not reduce output. Recipient will not reduce ITC. Fair enough. This is quite simple. Both will not do anything. Fair enough, sir. Now, second was because of department officers. Now, see what department officers used to do. A is providing service to B. 100 GST 18, 118. Now, A gives a discount of 10 rupees. Now, there will be no GST because this is a post supply discount not known at the time of supply. Department used to say recipient is providing service to supplier. 1 minute. Recipient is providing service to supplier. What is the supply, sir? You would have done something because of which you have got discount. So you have provided a service to supplier. And recipient was like, am I recipient or am I supplier? Because he thought that he is a recipient, but department officer said, see, you have got discount now. That means you have done something. Now, for doing something, you have got this as consideration. This is your consideration for a supply. Charge GST on this. You have to charge your supplier. He was like, what? This started happening. Now CBIC has clarified that it is not a consideration for a supply. If you recall, in valuation chapter, there was a similar case of no claim bonus given by insurance companies. Even in that case, see, no claim bonus is nothing but a discount which insurance company is giving to insured. Department started saying insured has not filed a claim last year and that's why he has got money. So insured is providing service to insurance company. How insensible. Insured is the recipient. How can he be a supplier? So that circular was there. On same lines, government has here also said that there is no service which recipient has given to supplier. However, if there was an agreement that B will sell the product for a lower price. B will sell the product to C for a lower price. And there was an agreement between A and C. Manufacturer has entered into an agreement with end consumer saying that you will get this at a lower price. And then B gets money from A. So he sold it for 90, and then got 10 rupees from A. Now, in this case, whether 10 rupees will be considered as consideration, the answer is yes. Because in that case, B is getting 90 rupees from C and A is giving 10 rupees. Total which B has got is 100. That is obvious. That is said in the circular. Third, say suppose B is doing promotional activities, which is not as part of our agreement, and A gives some discount because that other person is doing promotional activity. Na? So A said, anyways, you are trying to promote my product, though it results in your sales increase, but you are trying to promote my product. Let me give you some discounts by way of credit note. Then there is no GST on this. But if it is specific promotional activity, which is as per the agreement and defined consideration is there for, then in that case GST will be applicable. So if the dealer here is recipient, if the dealer is doing some specific promotional activity which is as per a agreement saying that do this, I will pay you 5 lakh, some advertising campaign needs to be done, put one big banner in front of your premise, I will pay you 2 lakh rupees. And in that case, the dealer is providing service to the manufacturer. Obviously, GST will be applicable. Very, very important circular. High chances of institute asking this in May 26 or September 26 or Jan 27. They can ask in any exam. Be very careful on this particular circular. Three key points. What are the three key points? First, what are we talking about? Post supply discount, which is not known at the time of supply. So if it is not known at the time of supply, there is no impact. That is the first point in the circular. No need to reduce output, no need to reduce ITC. Second, but a very important one is, if you are getting a discount as a dealer, it is not a supply for consideration. But say suppose you get additional discount because you have sold it to the consumer at a lower price, as there was an agreement between manufacturer and consumer, then that 10 rupees will get added to the consideration. Promotional activities done and you get discount because you have done some promotional activities which had no agreement, etc., there is no GST. But if it's a specific promotional agreement for which there is a defined consideration in the agreement, then GST will be applicable. Clear? Let's have a look at this. Very, very important issue. Representations were received from the industry seeking clarification on GST treatment of secondary or post sale discount, particularly regarding ITC entitlement, whether such discount form part of consideration, discount becomes consideration, and if they can be linked to promotional activities undertaken by dealers. Let's see the first one. Input tax credit on discounts through credit note. Under 16(1) of CGST Act, recipient is entitled to claim ITC on supplies used for his business. It has been clarified that when suppliers issue financial or commercial credit notes, they cannot reduce their original tax liability. They cannot reduce their original tax liability. Since the transaction value and tax liability remain unchanged, recipient is not required to reverse ITC attributable to the discount. No need to reverse ITC attributable to the discount. Why? Because supplier has not reduced output, you are not required to reduce ITC. Second, post supply discount and consideration. As per 231 of CGST Act, consideration includes monetary value of inducements for the supply. However, in the absence of an agreement between manufacturer and end customer, sales from manufacturer to dealer and dealer to customer are independent, principal to principal transactions. Post sale discount in such cases are merely price reductions to promote sale, do not constitute consideration. Just because I'm giving some discount doesn't mean it is an additional consideration for the dealer. Conversely, if manufacturer has an agreement with end customer for supplying goods at a discounted price, then the discount extended to the dealer enabling such supply shall form part of consideration, being in the nature of inducement. The answer is very simple, that if there is an agreement, then it becomes an additional consideration for the dealer. Discounts and promotional activities. Post sale discounts given by manufacturer to dealers are not to be treated as consideration for promotional activities. It is not a consideration for promotional activity. It is a discount. Leave discount as discount. Since these activities are ultimately to boost dealers' own sales. However, if the dealer performs a specific circle promotional service such as advertising campaigns, co-branding, customization, sales drive, exhibition, or customer support service under an agreement with defined consideration. Such service qualify as independent supply and GST will be applicable. So if there is a specific promotion activity under an agreement with defined consideration, mark and keep, then GST will be applicable. There has to be a defined consideration. If there's a defined consideration, then obviously, yes, GST will be applicable. GST on discounts. First one was credit note. We understood this. Second, post sale discount reduction. Third, promotional activity. No, it's not a promotional activity unless there is a separate supply. Quite important. Read it again without fail. Okay, now coming to invoice returns and refund. Okay, see section 34. Again, a very, very important amendment has happened in section 34, which deals with credit. First, let me give you a background. Credit note. Credit note is issued by supplier and it is received by recipient. Correct? Yes. Credit note is issued by supplier, received by recipient. There are four purposes for which you receive credit note. First, if there is a sales return, supplier will issue a credit note, recipient will receive a credit sales return. Second, to reduce the value. So suppose you have charged more on the invoice, to reduce it, you will issue a credit note. Third, to reduce the, say suppose you have charged more tax on the invoice, how do you reduce it? By issuing a credit note. And last one, deficient supply of goods or services. If there is a deficient supply of goods or services, then unsatisfactory supply, supplier will issue a credit note. Now, what typically happens when a credit note is issued? Supplier reduces output and recipient reduces ITC. This is what should happen if ITC is availed by recipient on the main supply, then on credit note he will reverse it. Correct? Agreed na? Supplier will reduce output if recipient has reduced his ITC. Correct? Now what they have done is they have made it mandatory that supplier can reduce output only if recipient reduces ITC. So now the reduction of output by the supplier is dependent on reduction of ITC by the recipient. So supplier can reduce output. Supplier can reduce output only if recipient has reduced ITC. It also means that if recipient has not reduced ITC, then supplier cannot reduce his output. Point number one. If recipient has not availed ITC or he is an end consumer, then in that case, supplier can reduce own output only if tax amount is given back to recipient. Because who had borne the tax? Recipient had borne the tax. Now, if supplier is claiming a reduction, then recipient should get back the tax amount because he had borne the tax. See, how does ITT work? Recipient pays the tax to supplier, supplier pays it to government. Now think reverse. Supplier is taking back from government and giving it to the recipient. So until and unless supplier has given back the tax to recipient, supplier cannot claim reduction in output. He will have to prove that he has given the tax amount back to the recipient. If he is not able to prove it, that means he has passed the duty incidence to the tax incidence to the recipient. He will not be eligible for reduction. Very, very good point added. Remember, institute can ask you this for sure. When is deduction allowed against output for the supplier? Two cases. One, if recipient has availed ITC, recipient should reduce his ITC. If recipient has not availed ITC, he should not bear the incidence. He should be given back the tax amount. Then supplier can claim a reduction. Beautiful point. Better write and keep. Let's now read the law. Section 34. Credit note. The proviso is added, provided that no reduction in output tax of the supplier shall be permitted if the input tax as attributable to such credit note, if availed, has not been reversed by the recipient where he is a registered person. That means no reduction will be allowed if ITC is not reversed. It also means reduction will be allowed if ITC is reversed. Then no reduction if incidence of tax has been passed to any other person in any other case. Incidence of tax is passed to any other person. That means you have taken the money back from government but not given it to the consumer, then you are unjustly enriching yourself. Then government will not allow you reduction of output. So reduction of output will be allowed only and only when tax amount is given back to the recipient because he had paid it. Now we have to give it back to the recipient. Clear? Write and keep. Be very careful on this. Language is also important. In sums also they can ask you this. Okay, next one. No annual return, that is GSTR 9, 9A. 9A is anyways if aggregate turnover is up to 2 crore from FY 24-25 onwards. So earlier, every year government used to say up to 2 crore, no GSTR 9. Because 9C, reconciliation up to 5 crore, no 9C. And up to 2 crore, no 9. So this government used to say every year. Now they have said 24-25 onwards for any financial year up to 2 crore. There is no need to file GSTR 9. Okay. Then one small change in section 38, which is communication of details of inward supply. See, the section used the word auto generated statement. Now, auto generated statement is replaced by statement. Now, it does not say auto generated statement, it just says statement because there is a new methodology on the portal which is not in your syllabus. IMS, invoice management system. So what happens in IMS is you can accept invoices, reject invoices, and then you can regenerate to be. But when we say auto generated, now that is not auto generated, that is generated by you. So that's why they have changed the language from auto generated to a statement. Plus, they've given a power that this GSTR to be may include such other details as may be prescribed, and IGST, which is paid on import of goods, that is also getting included in GSTR to be. And in future, there are a lot of other things which government is planning to include in GSTR to be, and that's the reason government has very clearly provided that we will prescribe other details, we will make to be more and more comprehensive. That's the point. Okay. Rule 91, grant of provisional refund. Old provision, new provision. Now, what has happened? See, what is Rule 91, grant of provisional refund? First of all, it's allowed only in case of ZRS, zero rated supplies, where 90% of the refund can be given as provisional refund. Immediately, 90% will be given. Now, if you see the language of the old provision, after scrutiny of claim, that means officer will scrutinize the claim. See the new language. On the basis of identification and evaluation of risk by the system, system will decide. That means officer will not have a discretion. Now, in most of the cases, you will get provisional refund for zero rated supply. Plus, the term zero rated supply is now not there in the new provision. That means new provision, provisional refund can be for all other cases also. But the problem is Section 54 only allows provisional refund for ZRS cases. So in Finance Act 2026, they are planning to change the language of Section 54 so that for inverted tax structure cases also provisional refund will be granted. What is the purpose of provisional refund? Purpose is quick refund. Money, working capital does not get affected because you get your money immediately 90%. So if you apply for 1 crore, you'll get 90 lakh immediately. Earlier it was based on scrutiny. Now the language is changed to on the basis of risk evaluation, which the system will do. If the system finds that it's a genuine case, then within 7 days it will make a order to give provisional refund. But proper officer even today has an option why he does not want to give a refund. So they can record the reasons in writing why they don't want to give a provisional refund. Which refund they are talking about? Provisional refund, 90%. Provided further that provisional refund order shall not be required to be revalidated by proper officer. Once he has said that he will not give, there is no appeal, etc., which you can do. Then, no provisional refund for areca nuts, palm masala, tobacco, manufactured tobacco, and essential oils. Plus, government has also notified that who will not get provisional refund. Any person who has not undergone Aadhaar authentication will not get provisional refund. No provisional refund, sir. No. No provisional refund if you have not gone undergone Aadhaar authentication and for following goods: areca nuts, pan masala, tobacco, manufactured tobacco, and essential oils. See, generally the list of goods is not kept in your syllabus, but in the statutory update, institute has kept this point. So better read and go, because there is a possibility that institute may ask you areca nuts, pan masala. These are risky products. They get refund, but they will not get provisional refund. Please understand. Huh? So all these products, na, if I were to tell you exactly how it works, they can do export. Now export with IGST, they can't do. So they'll not get a refund of this. Export without IGST, that is under bond or LUT. So here this they can do, but will they get provisional refund? Provisional refund, no. But refund eligible? Yes. So if a person is a pan masala supplier, can he do export with IGST? No, he cannot do. Without IGST? Yes. Provisional refund? No. Refund? Yes. That means only after officer has properly scrutinized, only then he will be eligible for a refund. Clear? Okay. Be careful on this. Okay, now coming to your favorite chapters: adjudication, appeal, penalty, miscellaneous provisions. 7374 will not be applicable for your exams. So you don't have to read detailed provisions of 7374. Only 74A will be applicable. It's mentioned in the institute's module saying that 74A will be applicable, not 7374. What they have done is, see, 7374 had limits that up to 20 lakh superintendent will see the matter, 20 lakh to 2 crore deputy commissioner or assistant commissioner, more than 2 crore additional commissioner, joint commissioner will adjudicate the matter. But that was in 7374. Now the same limits have been brought under 74A. Nothing changes as such. See, these limits were already there. These limits were there for 7374. Same limits have been added for 74A also, and for 122 penalty also. Say suppose there is a only penalty case and 122 penalty is being applied, then also these limits will be applicable. Let's see the limits. Monetary limits for issuance of show cause notice. If it's CGST, 10 lakh. See, but when they say CGST, CGST will have corresponding SGST also. So 10 lakh CGST, 10 lakh SGST, 20 lakh. IGST, 20 lakh. CIS all taken together 20 lakh. So that means superintendent can issue show cause notice up to tax amount of 20 lakh. Deputy commissioner to 2 crore, and more than 2 crore additional commissioner. These three are called as adjudicating authorities because they adjudicating authorities. They are responsible for adjudication. They issue show cause notice and confirm a demand order. Then it says the proper officer is determined based on combined tax amount excluding penalties. That means tax amount needs to be same. If subsequent statements increase the tax beyond an officer's jurisdictional limit, it will be transferred to the higher rank officer with earlier show cause notice answerable to that authority. So the new authority, it will be transferred to the new authority, meaning, say suppose first notice is for 15 lakh. Next period, you can issue a statement. That statement was for 10 lakhs. So 15 plus 10, 25. Then superintendent will not handle it. It will be transferred to assistant commissioner, deputy commissioner. Clear? Same thing applies for penalty. Same 20, 22 2 crore, about 2 crore. So 122 and 74A both will have the same monetary limits for penalty. Clear? Okay, very important one, pre-deposit for appellate authority, that is first level appeal. See, first level appeal, the pre-deposit is 10% of disputed tax. Correct? You are aware of this. 10% of disputed tax. But what if the order for which you are appealing is only an order of penalty? Then what will be the pre-deposit? If it is only for penalty, earlier only 129 penalty at 25% pre-deposit. But now that 25% is not applicable. Now if appeal relates to only penalty, pre-deposit in all cases will be 10% of the penalty in dispute. Careful. Be very careful. If it is order of tax and penalty, then pre-deposit will be 10% of disputed. If it is only penalty, then 10% of disputed penalty. If it is only for interest, no pre-deposit. Careful. And this is pre-deposit at the first level. Pre-deposit at the second level. Second level, additional 10% of disputed tax. And if the order is only for penalty, then additional 10% of disputed penalty for any case of penalty. Earlier it was 129 penalty. 129 penalty is search during transit. And here no pre-deposit. Clear? Sir, what about interest in any of these cases? Nothing. 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 One, careful. So what is second level? Appellate tribunal. This is appellate tribunal. This is appellate authority. So now have they made it simple? The answer is yes. And maximum first level 20 crores. Here also maximum is 20 crores. And this is CGST. So for IGST it will be 40 crores. But please don't double the percentage of tax or percentage of penalty, because tax or penalty will automatically get doubled. Tax or penalty automatically get doubled when it comes to IGST. So don't double the percentage of tax or penalty. Percentage of tax or penalty will never be doubled, because penalty or tax will always get doubled automatically. Clear? Let's read. And you can make a note of this. Provided that in case any order demanding penalty without involving demand of any tax, no appeal shall be filed against such order unless the sum of 10% of the penalty has been paid. Same language here, in addition to the amount payable under above provision. So Second, appellate tribunal level is always in addition to the amount which is already paid at the first level, that you are aware of. That's same as earlier. Okay. Then procedure changes for appellate tribunal. They have added a procedural change for single member bench. What is a single member bench in tribunal, sir? Any matter up to 50 lakh rupees can be heard by a single member bench. But if it is more than 50 lakh rupees, then in that case, it will be heard by a divisional bench. Divisional bench meaning two people sitting. And in divisional bench, one technical member will be there, one judicial member will be there. Let's have a look of what it says. And if it's any case relating to substantial question of law, then it has to be heard by divisional bench. Let's see. The president or vice president, if so authorized by the president in respect of any state bench, may either on his own motion or application filed by the parties scrutinize the appeal and transfer such appeal to single member bench within this representative state if the appeal does not involve a question of law. So first point, it should not involve a question of law, then it can be transferred to single member bench. In case the single member bench, while hearing the appeal allotted in Subrule 1, comes to know that the appeal may involve a question of law, such bench shall, for reasons to be recorded in writing, send back the appeal to the president or vice president for reconsideration. So, if the bench member feels that there might be a case of question of law, they will again send it back to the president. During the scrutiny of the appeal under 1 or reconsideration under 2, the fact as to whether in respect of the same taxable person within the same issue for the same or different tax period has already been heard or decided by a bench comprising of two members shall be taken into consideration, and where such matter exists, appeal shall be heard by technical and judicial member. What is it trying to say, sir? For the same matter or the same person or same issue or a different tax period, if it was already heard by a divisional bench, two people bench, divisional bench, then again it will be heard by a divisional bench, not by a single member bench, because single member bench person cannot override the decision of a divisional bench. For the purpose of reckoning the amount of 50 lakh under 1098, cumulative tax or input tax credit involved or amount of fine, penalty or fee shall be determined with reference to all issues for all tax periods covered in the order appeal against. So you will take a combination of all issues in that order and then determine whether it is below 50 lakh or not. It's not issue wise, it is order wise. That's what they are trying to say. So you can just mention it is always order wise and not issue wise 50 lakh computation. Okay. Manual filing has been removed. Neither appeal nor memorandum of cross objection can be filed manually. Only electronic filing. See, there used to be a point in Rule 110 and 111 which said if the registrar allows, then manual filing can be done. But now that point, if the registrar manual filing, now that has been removed. Now it's not there. 113 amended, dealing with order of appellate tribunal. Now, earlier it said that appellate tribunal will pass an order. Now, in addition to the order, they may also pass a, they shall also pass a summary order. What is summary order, sir? Summary order will give the tax amounts as to how much is required to be paid by that person. What is the difference between main order and summary order? Main order will have all the reasons, the arguments, the deals or the sections, the case laws which have been taken into reference, and summary order will only have amount. Final tax payable after the hearing of the appeal is this much. X amount has to be paid, Y amount has to be paid. That much will be there in summary order. Okay. Okay. A new penalty section has been added. Penalty for failure to comply with track and trace mechanism. Now, first you will have to understand what is track and trace mechanism. Now, you understand that government wants to control pan masala, whether production is being reported correctly, whether taxes on pan masala is being paid correctly, because the taxation on demerit products is very high. So for that, government has come up with a mechanism called as track and trace. What is track and trace? They will notify a unique identification mark. What will this unique identification mark deal with? So they will say that every packet of pan masala should have a unique identification mark. Every packet, and you should have electronic data of which packet has which identification mark. So every packet has a unique mark, and you have a list that 10,000 pouches have been supplied, each having a different unique identification mark, which can be tracked and traced easily. That means if a officer goes to a pan masala shop, not the manufacturer, pan masala shop, and picks a pan masala, by scanning that identification mark or by carrying out some verification on that, he should get to know the details of that product, from which factory it was manufactured, from which machine it was manufactured. Everything should be available. So every pan masala pack should have a unique identification mark. And if the manufacturer does not follow it, then normal penalties for tax evasion might apply, because he might be a tax evader, because of which he has not done all this. In addition to that, there will be a penalty of 1 lakh rupees or 10% of the tax, whichever is higher, additionally. So not following this mechanism will lead to a penalty. Sir, has government notified any person or any class of goods? The answer is no. Till now, they have not notified any class of goods or any person who has to maintain these records. But in future, they will surely do it. Section is introduced. Penalty for not following the section is also introduced. And remember, this is an additional penalty over and above the normal tax evasion penalties under 122. This is 122B. And let's see. Notwithstanding anything contained in this act, very powerful section, where any person referred in 148A, 148A, we will read here. Acts in contravention of the provision of the said section, that is 148A. He shall, in addition to any penalty under chapter 15 or provisions of this chapter, that means penalty chapter, be liable to pay a penalty equal to an amount of 1 lakh or 10% of tax payable on such goods, whichever is here. So additional penalty. Now let's see what is this track and trace mechanism. Section 216A, unique identification marking, means the unique identification marking referred in 148 subsection 2 clause B and includes digital stamp, digital mark or similar mark which is unique, secure and non-removable. Unique, secure, non-removable. Let's see. The government may on the recommendation of council, GST council, by notification specify the goods, person or class of persons who are in possession or deal with such goods to which the provision shall apply. They can say that it will apply to manufacturers and dealers. Retailers generally they will not, but no guarantee. Okay. What should such person do? The government may, in respect of the goods referred in clause A of subsection 1, provide a system for enabling a fixation of unique identification mark. So here it is talking about fixation, making it, and for electronic storage and access of information contained therein through such persons as may be prescribed. So first, it will provide what has to be affixed. Second, what kind of records you need to maintain for that. Then prescribe unique identification marking for such goods, including information to be recorded. What all information should be there in that particular unique identification marking? The persons referred in subsection 1 shall affix on the said goods or packages unique identification marking containing information, furnish such information or details within such time, and maintain such records as may be prescribed. Nothing given as such, but maybe there will be one written for this also. Furnish details of machinery installed at the place of business of manufacture of such goods, including identification, capacity, duration of operation, and such other details or information within such time and such form. And last, pay such amount in relation to system referred in to as may be prescribed. Uh, so for this, they may fix some amount that for each machine this much you have to pay. Oh, that is also possible. That is also possible. Yes. So they have made the provision, but till now they have not made it effective. That's the good news for all of you. Only the provision is there. Nothing has been prescribed as to what product, what kind of a fixation marks, what kind of tracking mechanisms will be there, what kind of electronic records, what kind of submitting of records. All that is not prescribed till now. Okay. So this were the changes in GST. Now we move on to the changes in customs and FTP. So customs and FTP, not many changes. One provisional assessment has undergone changes, and they have brought in one more revision of bill of entry. These are the two major changes which have happened. Otherwise, it largely remains same. Now, provisional assessment. The cases of provisional assessment are still the same. What are the cases for provisional assessment, sir? When the importer or exporter is unable to determine it, proper officer deems necessary physical or chemical test. Documents are produced, but proper officer requires further inquiry to be done. Documents are not produced, and proper officer requires further inquiry to be done. So the cases where provisional assessment can be initiated remains same. Then what has changed, sir? Time limit has been added. So section 18 did not have a time limit. Now there is a time limit which is incorporated. And the time limit for completing custom provisional assessment is 2 years from the date of provisional assessment. So they have to finalize the provisional assessment within 2 years from the date of provisional assessment. What about GST? 6 months plus 6 months plus 4 years. Correct, correct. And here it is 2 years, which can be further extended by 1 year by commissioner. Principal commissioner or commissioner, both the authorities have same power. So 2 years plus 1 year. That means any provisional assessment should be completed within 2 years plus an extension of 1 year. And because of this section change, entire regulations also have been changed. Earlier there was 2018 regulations. Now that has completely been replaced by a new regulation. We will read that also. Yes. If the proper officer is unable to assess the duty finally within the specified period for these reasons, so there might be some five reasons which government has mentioned in the law itself, that if because of these five reasons proper officer is not able to complete it even in 3 years, then in that case the time limit of 3 years will start from the date when these reasons cease to exist. Careful. The time limit is 2 years plus 1 years. Total 3 years. If proper officer is not able to determine it because of these five reasons, then the time limit of 2 years and 1 year will start from the day when these reasons cease to exist. What are these reasons? Any information being sought from an authority outside India. You are getting some information from US Custom Department or Dubai Custom Department. You want that information is not coming out from outside India. Appeal is pending for that matter before Appellate Tribunal, High Court, Supreme Court. Interim stay is granted by the court. Stay has been granted, then obviously officer cannot act. Board has in similar issues specific direction to keep matter pending. Board feels that for some goods we are unable to determine as of now. Importer or exporter has a pending application before settlement commission or interim board. Now the settlement commission provision is not there for your syllabus. What settlement commission means is you can go to the settlement commission and settle the tax matter. Wonderful, sir. Legal settlement, sir. Correct. Legal settlement, but that's not in your syllabus. When PO will inform the importer exporter the reasons for non-finalization of provisional assessment, and in such cases, time specified above shall apply not from the date of provisional assessment but from the date when such reason ceases to exist. From the date such reason ceases to exist, from that time it will be applicable. Okay, so as I told you, new regulations have come. 2025 new regulations. Earlier it was 2018 regulations, which had some time limits that you would have read in the class. So those time limits were there, but now ignore those 2018 regulations completely. Now full new regulations and lengthy regulations have come. That is finalization of provisional assessment regulations 2025. Earlier, the funny part was regulations had time limit. Main law did not have a time limit. Now they have added time limit in main law and modified the regulations in line with the main law. Okay. First read the heading. While you read the heading, you'll understand the provision. Regulation 4. Time limit. Now only these regulations have been kept by institute in your statutory update. So we only have to read the regulations which are given by institute, not all regulations. Time limit and manner of submission of documents and informations for the purpose of finalization of provisional assessment. Now, say suppose officer does not have a document. If he does not have a document, he can go for provisional assessment. Then he has to give that list of documents which he needs, and that he has to give within 15 days. So what is the first obligation? First obligation is on us or officer officer has to give a list of documents which is required by him to complete the provisional assessment. He has to give this list within 15 days. Once we get the list, we have to submit the documents within 2 months. So first PO gives list of documents or information within 15 days. Then what do we do? Then importer, exporter to give document or information within 2 months from the date of requisition by the officer. From the date he seeks those documents, we have to give it. Sir, extension coming. Now, extension, additional 2 months extension can be given by the same officer. The same officer who has given us, who has seek the information, he can extend it. Plus, his senior not exceeding 14 months in total. Okay. So total time cannot exceed 14 months. Yes, let's read this. So first 2 months, an extension allowed for submission. Proper officer may, for reasons to be recorded in writing, allow further period not exceeding 2 months on his own or at the request of the importer exporter. An officer who to whom the proper officer is subordinate, senior officer, may allow additional time limit as he deems fit on request of importer exporter. He cannot do himself, only on request of the importer exporter. But no extension under this regulation may be allowed beyond 14 months from date of provisional assessment. In total, it cannot exceed 14 months. Clear? In total, it can never exceed 14 months. Okay, fair enough. Okay. On submission of all the documents, importer shall inform the proper officer in writing that he has submitted all the documents to be furnished. Where the documents informations are not made available within the time limit as per above provision, PO will finalize the provisional assessment based on records available. Then PO will proceed to finalize it based on whatever records he has with him. Okay. Time limit to conclude inquiry for the purpose of finalization of provisional assessment. Now, during this, can officer do an inquiry? The answer is yes. Now, this is a separate point. Inquiry by PO. He can do an independent inquiry and he should complete that inquiry, not exceeding 14 months. Complete the inquiry. That's it. The section is only this much, that the time limit for completing the inquiry is 14 months. Let's read it. Where the duty leviable on the imported or exported goods is assessed provisionally by PO for reasons that PO deems fit to make further inquiry. You remember further inquiry. Officer of Customs shall complete the inquiry and transfer the relevant documents with the report in writing to the PO for finalization of assessment within 14 months from the date of provisional assessment. During such inquiry, if documents is required, PO may seek such details within prescribed period. PO can ask some details from the importer. So, see what two provisions have we discussed. First, Regulation 4. This is Regulation 5. Regulation 4, time limit for PO and time limit for importer. Regulation 5, time limit for completing the inquiry. Okay, let's go to 7. 6 is not kept by institute, 7 is there. Payment of duty of own ascertainment before finalization of provisional assessment. This is quite a simple point. Can you pay the duty before finalization of the assessment? Say suppose during the inquiry you feel you are wrong. Let me not wait till finalization of assessment. Let me pay it now only. The answer is yes, you can go ahead and pay it, and any interest consequent to that, it will also have to be paid. Let's see it. It's easy. Importer or exporter may pay any amount electronically against bill of entry or shipping bill on his own ascertainment during the pendency of provisional assessment. This amount shall be adjusted against duty finally assessed or reassessed. However, importer is liable to pay interest on the above amount consequent to final assessment or reassessment order. And you know the interest 15% per annum from first day of the month in which provisional assessment was made till the date of payment. Okay. Now coming to the time limit for finalization of provisional assessment. 2 years. You know, maximum is 2 years. Now let's see what is given here. Proper officer shall finalize the provision due to provisional assessment wherever it is possible, mandatory or optional, wherever it is possible within 3 months. Within 3 months of what? Receipt of information or expiry of time limit to give information, conclusion of inquiry. So once these two get over, within 3 months, finalize the assessment. This is regulation 8. Now, this is optional time limit, maximum 2 years. That we will read. 2 years from the date of provisional assessment. Let's see. Extension. An officer to whom proper officer is subordinate may allow, that means a senior officer may allow additional time period of 2 months at a time. However, assessment shall finalize within 2 years from the date of provisional assessment. So, every time a 2 months extension may be granted at a time, but should not exceed 2 years. And what about these cases where PO is unable to determine based on these five? Some information from outside India, appeal is there, stay is there, board has given a instruction, or application is pending with settlement commission, then 2 years will start from date on which the reason ceases to exist. We are aware that 2 years will start from the date from which those reasons cease to exist. This we are aware of. Okay, how do you finalize? These were the time limits. So you are very clear with time limits. How do we finalize? Finalize is very, very easy. If final assessment is contrary to provisional assessment resulting into additional duty, then an opportunity to be heard needs to be given to the other party. Final assessment confirms the provisional assessment, then he will pass the provisional assessment and adjust the, sorry, he will pass the final assessment order and adjust the provisional duty as final duty. If there is some deficiency, then the importer exporter has to pay the amount along with interest. Once he has paid, any bond will get discharged, any security which is given, that will also get discharged. Let's read. Provisional assessment shall be finalized as provided in section 18. Where final assessment is contrary to provisional assessment, PO shall pass a speaking order following natural justice. Opportunity to be heard. Where final assessment confirms provisional assessment, proper officer shall finalize the same after ascertaining the acceptance of such finalization from the importer exporter on record and inform them. where importer exporter is to pay deficiency of amount finally assessed or reassessed after adjustment of amount already paid. Bill of entry or shipping bill may be returned to for payment of duty. Importer exporter is also liable to pay interest on the above, from first day of final provisional assessment till the date of payment. Manner of closure subsequent to finalization. How do you close the proceedings? On finalization, where final assessment has confirmed the provisional assessment, it will get closed anyways. Duty has been paid along with interest in case of home consumption or export. Very good. Appropriate bond has been executed for the excess duty in case of warehouse goods. Then the bond executed at the time of provisional assessment with security, if any, shall be cancelled or recredited. Recredited, why do they use recredited? It might be a running bond. In running bond, it will be recredited to that account. And the security shall also be returned if there is no pending due. What security are we talking about? Bank guarantee. That bank guarantee will be returned. Where the duty has not been paid for more than 90 days from which it was due, then it will be first adjusted against the duty, or it will be recovered as per 142, which is not in syllabus. So you don't have to remember this, but just remember 90 days, because 142 you don't read in your syllabus. And if he is entitled to a refund, then refund will be processed in terms of section 18. Same 18 deals with provisional assessment. Okay, 11 is nothing. Extension of time limit is that 1 year. 2 year period may be extended by commissioner by additional time of 1 year. You're aware of it. Because the total time limit allowed is 3 years, correct? Okay, penalty, you can ignore this. Institute has kept it in statutory update, but the penalty provision itself is not there in syllabus. So anyone who contravenes will be liable to a penalty, but that penalty provision is not in syllabus. So you can go through it once. Institute has kept it, but I don't think a question can be asked on this because the point itself is not there for examination. Okay. Now coming to one new section which has been added, 18A. Very interesting section. Now just imagine this. You do a self-assessment in customs, correct? Now, while you did a self assessment, you paid 100 rupees at stats. Department has not yet finalized the assessment. They have not given a clearance to you. You get to know that this was 120 or 80. Can you reassess yourself? The answer is yes. Now, 18A, see the heading, voluntary revision of entry post clearance. Even after the goods have been cleared, I can just voluntarily reassess with the same bill of entry. And if I say 120, then I have to pay 20 with interest. If I say 80, then it is a refund application, deemed to be a refund application. And 1 year time limit, because refund application 1 year time limit is there. 1 year time limit will start from date of payment of 100. So that means I don't have to file a separate refund application. I can just go for section 18A, do a voluntary revision of bill of entry. And when I do a voluntary revision of bill of entry, that itself becomes a refund application. But that also means I have to file this within 1 year. But this I can do anytime. See, when you have to pay some duty, that you can do anytime. But when it comes to taking a refund, it has to be within 1 year. Very, very good section added where even after clearance, you can directly go ahead and uh, reassess the duty by voluntary revision. Let's have a look. Good provision. Mark it as very important for exam. Voluntary revision of entry post clearance. Circle post clearance. After the goods have been cleared, an importer or exporter can change the details they have already filed about the good. This revision must be done in prescribed form, manner, time, and subject to conditions. Conditions meaning it should not be a case of audit. It should not be a case where department has caught it and then you say, "Wait, I will revise and come." Those are the cases. Self-assessment, where when revising the entry, importer exporter must recalculate the duty payable on the goods. Impact of revision. If revision entry shows less duty was paid earlier, then short paid amount can pay the difference along with interest under 28AA, which is not in your syllabus. So they will not ask you an interest question on this point. If the revised entry shows excess duty was paid, then the revised entry itself will be treated as a refund claim. That means no need to file separate refund application. Verification and reassessment by proper officer. Then what will the proper officer do? Proper officer may verify the revised entry and self-assessment in cases selected primarily based on risk evaluation and reassess the duty if self-assessment is incorrect. If self-assessment is incorrect, he will reassess. Now see where this is not allowed. Cases where revision is not allowed. 1. Audit search seizure is already initiated against the importer, obviously. Cases requiring refund where proper officer has reassessed the duty under 17 or assessed the duty under 18 or post or courier. So post or courier, provisional assessment or reassessment. You have to go for refund application separately. You can also use 18A. Other situations as may be Other situations as may be notified by the board. Board has a discretion to decide other situation. This note is important. New explanation to section 27 for removal of doubts. It is hereby clarified that the period of limitation of 1 year in cases refund for revised entry shall be computed from date of payment of such duty or interest. So whenever you had paid that 100 now from that 1 year time limit will be applicable. Okay. Then custom import of goods at concessional rate quarter has been defined. This was there when in Jan 26. So quarter is Jan to March, April to June, July to September, October to December. We are aware because part of the quarter is considered as full quarter for depreciation. Just be careful. Even for entire GST, we use the same. Foreign trade policy, new trade facilitation measures that uh, they have an option to give their views, and if industry gives a view and government has an option to give reason why they did not accept the views of the trader. So this has been added. Obviously government has an option whether they want to give the reasons to the industry. And RODTEP SEZ's EOUs will get from 1/6/2025, and the RODTEP support will continue till 31st March 2026. This date they have been amending every 3 months, 6 months. So maybe next they will update this to 31st March 2027 or 30th September, because exports are now under pressure. So RODTEP is like a cashback which government gives to exporter. So I don't think they will withdraw this support. What is RODTEP? Remission of duties and taxes on export product, where they give a percentage of FOB value or a fixed quantum per unit as e-credit balance, which can be used to pay basic custom duty, or you can transfer